Now comes to the first panel discussion for today. Our speakers are ready, and let me introduce them one by one. First is Mr. Rex Ho, Mainland China and Hong Kong Financial Services Tax Leader, PwC Hong Kong. Second is Mr. Ronald Lee, Managing Director, Investment Management Division, Goldman Sachs Asia, LLC. And Ms. Helene Lee, CEO and co-founder, Go Impact Capital Partners. Go Impact Capital Partners. And Mr. Peter Stein, Managing Director, Private Wealth Management Association. The moderator of the panel will be Mr. Rocky Tong, who is the Head of Policy Research of FSDC. Now over to Rocky to moderate the session.
Thank you.
Rocky,
thanks a lot, Eunice. Thanks a lot, Eunice. And thank you very much, Joseph, for being so supportive as always and delivering an excellent opening remarks for our afternoon session. As Joseph mentioned, we have published two respective reports on developing Hong Kong as an ESG investment and family office hub for Asia earlier this month. And today we are very glad to have two very distinguished panels of speakers with us to dissect the topics. I'm not going to go through their bios by myself, but instead I'm going to turn to the gentleman and Ms. Han Lee later on, and so they are going to make a short introduction. First, I would like to go to Mr. Rex Ho, who on a pro bono basis is a member of the FSDC New Business Committee. Rex, please.
Okay, hi everyone. Very happy to have the chance to actually share with you guys about our family office. My name is Rex Ho. I'm a tax partner of PwC. I also lead the financial services tax practice of PwC in China and Hong Kong. Doing tax is my day job. As Rocky mentioned, I have another role. I'm also a committee member of the New Business Committee of FSDC. And I'm also very honored to have the chance to actually lead the family office paper just issued by FSDC a month ago.
Thank you. Thanks a lot, Rex. Now, let's turn to Mr. Ronald Lee, who is also a member of the working group.
Hi, thank you very much, Rocky. My name is Ron Lee. I'm a partner at Goldman Sachs. I've been at the firm for 22 years. I'm responsible for the private wealth management business, and I've been doing that in the current capacity for the last 9 years. For the prior 13 years, I was on the sales and trading side of the business and the investment bank of Goldman Sachs.
Wonderful. Thanks a lot, Ron. Let's now turn to Ms. Han Lee.
Hello, everyone. Good afternoon. Very nice to be here, and thank you for inviting me, Rocky. My name is Helene Lee. I'm a banker, management consultant turned entrepreneur in the green finance space, finding the platform of Go Impact just after I left a fairly long career in the finance industry. So very pleased to be here. It's a topic dear to our hearts, and we help a lot of stakeholders across the board on. So very delighted to exchange with everyone.
Thanks a lot, Helene. And now, last but not least, we would like to have Mr. Peter Stein to share a little bit of background of himself. He's also a member of our FSDC Family Office paper.
Thanks, Rocky. I am the Managing Director of the Private Wealth Management Association. So we work very closely with private wealth management providers in Hong Kong, including the biggest firms in that industry in the world. Before that, I was with UBS for a number of years. And before that, I was a journalist for many years with the Wall Street Journal.
Wonderful. Very interesting careers that our panelists have. And now let's turn straight to the topic of family office and how Hong Kong can develop itself as the family office hub for Asia's family and also global families. Rex, I would like to first turn to you since you lead, you actually have led our working group for the past 9 months. So perhaps you can highlight some of the key findings and recommendations that we had laid out in our paper, and how and why we also want to develop Hong Kong as a family office hub.
Okay. Thanks, Rocky. Probably actually before we actually talk about the recommendation, probably actually we put everyone into context first. Why we actually think we want to actually build Hong Kong as a family office hub. I think the answer is very simple. I think as alluded to by Joseph, we see a lot of growth potential in this space. And day to day, we have received a lot of inquiry from some of the ultra high net worth individual wanting to set up family office in Hong Kong. But if you have to look at some of the statistics, which also say include in our report, as of July 2019, in fact, based on the Campo research, the Camden research, there are about 7,300 single family office around the world. And then if you actually look back 18 months ago, if you compare with the number of single family office at the beginning of 2018, only over 18 months, there was an increase of 38% of the number of family office around the world. So you can actually tell there's it's a good potential. A lot of the ultra high net worth individual actually trying to set up their family office to manage their investment affairs and then their family affairs as well. And also if you have to look at the number of ultra high net worth individual in Asia, probably in terms of the percentage, around 28% of the ultra high net worth individual around the world, in fact, are based in Asia. Okay, but if you look at the number of family office, only 18% of the family office are now based in Asia. So therefore, you can see there's a gap. A lot of the ultra high net worth individual in Asia, in fact, they have not set up their family office. Okay? So therefore, we see there's a lot of potential in this area. Also, if you're closer to home, if you actually look at China, right? So everyone actually knows China right now has a large population of the first generation ultra high net worth individuals. In fact, recently we talked a lot about GBA. 23% of the ultra high net worth family of China, in fact, are based in GBA. So given the proximity of Hong Kong to GBA, we see a lot of the growth potential for this group of the ultra high net worth family to come to Hong Kong, set up their family office. Of course, I think setting up family office in Hong Kong, I think definitely will benefit the investment management industry, but I think probably it's more than that. We also can actually bring a lot of the value, I think, to the professional service provider, including bank, custodian, lawyer, tax advisor, accountant. So basically the impact which can be brought by the family office to Hong Kong economy, I think is huge, the potential. Also actually some of the statistics. Over the last 3 years, some statistics show, in fact, every year, there are around 200 family office set up in Asia. Okay, for the last 3 years, every year 200 family office. So if Hong Kong can capture, we are not too aggressive, 30% of this 200, okay, every year 60 new family office come to Hong Kong, based in Hong Kong. In fact, our estimation is it can bring around $48 billion new AUM to Hong Kong. If you translate it to the actual spending, it talk about around $800 spending per year in Hong Kong, and also can actually bring around 700 high value job to Hong Kong. So we basically, in short, we see family office, in fact, is a growth engine of the private wealth management industry. So probably I pause first. Yeah.
Thank you very much, Rex. You're right on. I think, many of us in economic research or, policy research side of things, we have identified a lot of good stuff that, family offices can bring to the table. Peter, now I would like to turn to you. And since, you interact with your members on a day-to-day basis, and like you said, your members are the biggest banks in the private wealth management industry. Do your members agree with what Rex mentioned just now? Are they hiring a lot more in recent years, both in Hong Kong and in other parts of Asia, to serve the family offices that are set up in the region?
Sure. Thanks, Rocky. And I would say, everything that Rex just described is something that you will hear our members talk about as well. This is a global phenomenon. It's something that we're now seeing play out in Asia. Family offices have been a major component of the private wealth management sector in other parts of the world, particularly in Europe and in the US. And now with the tremendous growth in wealth creation in Greater China and the rest of Asia, we're seeing that a number of private wealth management clients have already set up family offices or are planning to do so. There's family offices that have been set up for some of the older wealth in places like Hong Kong, where you have families that have built up wealth in previous decades, and then you have a number of new family offices which are being created on the back of wealth creation in China. For instance, the budding cohort of tech entrepreneurs in the Greater Bay Area and in Shenzhen. And many of them are quite keen to set up their own family offices or already doing so. So it's definitely a phenomenon we've seen. We see that a lot of our members are dedicating RMs specifically to cater to the family office demographic. Some of them have special teams that are set up just to deal with family offices because their needs, their interests can be a bit different than other clients. Many of them are interested in being dealt with much as some institutional investors might be dealt with. A lot of them want access to private deals that institutional investors would traditionally be approached first with. So it's definitely something that a number of our members have already been adjusting their business model to cater to, and we expect that phenomenon is going to continue, particularly as wealth continues to grow in this part of the world.
Absolutely. Thank you. Thanks a lot for sharing with us those observations, Peter. Now I would like to turn to Ron. I guess, like everyone in the audience would not disagree with me that Goldman Sachs is leading financial services provider around the world with, leading professionals in all financial centers. So Ron, I would like to see whether or not you see there is an increased demand for services coming from family offices in recent years. And also, if there is an increased demand, do you see any difference, if at all, coming from these family offices comparing to other institutional investors or just a regular high net worth individuals, so to speak?
Right. So thanks, Rocky. Becoming a little bit of the broken record, because I think Rex and Peter have articulated it really well as it relates to the growth of the family office opportunity in Hong Kong. So I won't really be able to improve on their description and the picture that they've painted, but to confirm, yeah, it's a real opportunity for us. I think the second part of your question is very interesting, which is how do we see the family offices compare to institutional investors, more traditional institutional investors, as well as individuals, high net worth individuals. So what I would say about that is when we compare the family offices to institutions, I think there's two features that maybe set them apart a little bit. Number one is the heterogeneity of their business models. If you look at the different family offices, they vary much. The range of strategies and approaches and the scope is much broader than what we find on the institutional side of things. And I think that is a reflection of the heterogeneity of the beneficial owners of those family offices, whether they be single or multi. We just find that the range of approaches is much more diverse and heterogeneous. Second thing is, our colleagues on the prime brokerage side put out a research report which outlined the survivorship of new hedge funds in Asia. And what they found was in a 10-year observation period from 2009 to 2019, about 3/4 of the newly launched hedge funds were still in existence after 3 years. So 25% went out of business and 75% roughly survived. And then after 5 years, the percentage of survivors goes down to about 60%. So 60% survive and 40 go out of business in the hedge fund space in that period between 2009 and 2019. Family offices have much longer staying power because the individuals are almost always alive 3 or 5 years after the launch. They may not have the same professionals in the family office, their strategy may have changed, but they have much longer staying power relative to most institutions when compared with that group. But I would say that that's probably as interesting a comparable universe as any. On the individual side, of course, I think the family offices generally, but not always, bring a different level of professionalism to the whole investment approach. And they often, but not always, increase the level of sophistication in terms of the approach relative to individuals investing themselves. So that's what I would say about that, Rocky.
Wonderful. Like this is, fascinating. And I really like your comparison between like a hedge fund and a family office and how they distinguish themselves from the former. Halim, now I would like to turn to you. Like you mentioned, before becoming, the founder and CEO of Go Impact, and I'm also aware that you are the general manager of FinTech Association of Hong Kong. You had a very distinguished career in financial services. So, and I'm sure that you had you had quite some contacts with family offices, both at home and abroad. So I would like to see if you can share with us some observations that you have with family offices, and if your observations have translated into some actions that you have taken over the years, if I may. Thank you.
Yeah, sure, Rocky. Thank you so much. I don't think I can add a lot of color to what Rex and Ron were saying before around family offices, and definitely agree with all that. But there are 3 points actually I would like to just share here, echoing a little bit of what Joseph was saying in the opening address. Okay, Joseph mentioned resilience. And I think resilience is really a theme that straddles both family office as well as ESG. Now, I want to cite the example of like what Ronald was saying just now, how, the survival rate of, family office is much more sticky, if you like, than your typical hedge fund growth cycle. But to the fact that family offices are going through a huge wealth transfer. Okay, there's talk about a 30 trillion wealth transfer in the next decade, between now and 2030. And I think it also coincides with the 2030, the 17 Sustainable Development Goals of the UN. That's the target date for achieving those. And that's very much at the back of minds of a lot of banks as well as financial institutions in mapping out their ESG strategy. And the family offices that I've been talking to throughout my career, whether it be, with a Wall Street giant or with another big European-based financial institution, have always been around, so what more can I do with my capital? They're looking at it in a much more holistic asset allocation, portfolio management manner. And that's the second part of resilience that I want to share here, that really family offices, if you look at the whole spectrum of them, whether it be single family office or some of the multi-family offices, they are looking at things that might, help them weather the storm a little bit better. Okay, they are institutional in behavior, sure, and institutional in terms of AUM size, but they probably are a bit more risk adverse, if you like, a group of people. And that plays to the ESG agenda quite well, I think, because if you look at the inflows into ESG funds from the beginning of the year, when there's COVID outbreak until now, the inflow into ESG funds has been a lot more than into other asset classes. If you look at the S&P 500 index and the S&P ESG index, the S&P ESG index have outpaced or dropped less than the S&P 500 index by as much as 3% in the same period since the beginning of the year. So all these points to a kind of risk mitigation ability that somehow the sustainable investment, sustainable finance instruments have compared with other asset classes. And I think family offices are very much looking into that. And that echoes very well, what Joseph was saying and what our other fellow panelists were saying.
Wonderful. Thanks a lot, Helene. I think that is, a consensus that we are getting, among all the panelists here. The resilience, significance to Hong Kong as a financial services center, is very clear. Now let's turn to the recommendations of our report. So, Rex, I would like to go back to you as the leader of the working group. Can you perhaps highlight some of the key recommendations that we have put together for the government, and also, with your professional background in mind, I would like to seek your advice on what else we can do for family offices in terms of tax consideration. But I will, before that, I would like to highlight that, the government, like Joseph mentioned earlier, is very supportive of the development of, family office here in Hong Kong already. Our friends at Invest Hong Kong and HKMA and FSDC have been working very closely to come up with a pitch book and also our website. Check it out if you haven't, please. And also, the SFC is also working on some in the regulatory clearance. So that is the background, but I would like to turn back to you, Rex, for some highlights of our recommendations. Thank you.
Okay, thank you, Rocky. So I think, as actually Joseph actually talked about, I think Hong Kong has a lot of the good area, very good, complete investment management ecosystem. Basically, it's actually already quite well placed to attract family office. But when we have to prepare this paper, of course, we can't be complacent, especially when we have to look at all this competition from the neighboring jurisdiction of everyone is actually trying to attract family office. So therefore, the working group basically come up with recommendation on 4 areas that we believe, if we can actually make good all these 4 areas, Hong Kong can be in a much stronger position to attract the business. I mean, these 4 areas mainly, and some of the area and some of the recommendations that we, in fact, include in the paper. In fact, as actually Rocky mentioned about, the government is actually very supportive. They already take on board some of these actual recommendations and already take action. Okay, but in a nutshell, these 4 areas, including regulatory, tax, talent management, and also forming a one-stop shop to facilitate the setup of the family office. As far as regulatory area is concerned, the working group basically actually recommend the SFC, although SFC actually come up with a guideline earlier this year to clarify some of the licensing requirement for family office under the situation where they need to get a license, whether they do not need to get a license. But the working group basically believe a further clarity on give more example on more clarity on the situation where family office, especially for single family office, their licensing requirement will definitely help the newcomer to basically understand, have more steer on the regulatory side. Okay, and then on the tax front, Joseph also had to mention about in recent year, Hong Kong has introduced quite a lot of the new tax incentive, the fund incentive regime. So one of the key recommendations that we include in the paper is to include family office in this exemption regime. Okay, our exemption regime currently mainly for funds, but if we can include also this exemption regime, enable family office to enjoy it, then we can be very competitive. Especially Rocky mentioned about, okay, our key recommendation. A lot of people, especially family office, they may actually compare Hong Kong with Singapore. And then Singapore, a lot of the people basically also understand Singapore has a quite user-friendly exemption regime. So what our recommendation in the paper is to, we use our existing already quite good exemption regime and then include family office, okay? So that is on the tax front. On the talent management, we also understand the skill set used in family office probably may not be exactly the same as the skill set of the talent in the investment management industry. They may actually need to know everything. They are probably actually more a generalist with deep knowledge in certain areas. They may actually need to know investment management. They may need to know family governance, trust, tax. Okay, so therefore our recommendation is to encourage the government to work with the industry association, work with the university to come up with some curriculum to groom our new generation, to train our people such that they can actually they can take on the family office opportunity, okay, going forward. And the last one is the one-stop shop recommendation, basically to set up a one-stop shop to help a newcomer to maneuver, to coordinate the respective government authority when they want to set up in Hong Kong. And also another key area is to coordinate the promotion of Hong Kong. Okay, so these are briefly the four key recommendations in our paper.
Thank you. Thanks a lot, Rex. I would like to now turn to Ron. Ron, as a practitioner that leads Goldman's wealth management practice here in Asia, I would like to see whether or not our recommendation resonate with you and all your clients. Particularly, I would like to check whether or not the regulatory clearance is something that is of interest to your clients, and also on the talent side of things, is it something that we should work on?
So I guess the answers are yes and yes. So as it relates to the regulatory, I would definitely say that both the existing family offices as well as people who are prospectively considering to set up family offices in Hong Kong are very focused on the regulatory framework. And so the revisions along the lines of what are outlined in the paper, I think, would be very well received, both by the existing as well as the prospective family offices. As it relates to the talent, that also is something, but I guess I would just stress, as Joseph outlined in the beginning, between the HKMA and the SFC, and then all the great work that Peter does at the PWMA, I think there is already a lot of stuff in train as it relates to the development of the people and the human capital. But that of the four recommendations, that is definitely the one that's closest to my heart, because I really think that the long-term health and soundness of the family office ecosystem in Hong Kong relies very, very heavily on the quality of the people. And so everything that Hong Kong can do to help itself to, as Rex put it, groom the future talent will obviously inure to the benefit of Hong Kong. Thanks
a lot, thanks. And Peter, I would like to now turn to you. I'm sure, you will agree that and you and your members would agree that regulatory certainty is something of interest to family office, just like what Ron was mentioning. But why is it especially so for family office? Can you shed some light on that?
Sure. So I would just say, Rocky, it's not that family offices necessarily have bigger regulatory concerns than other financial market players. But because they're not necessarily catered to specifically in the regulatory framework the way other institutions are, there's a little bit of ambiguity as to where they actually fit in these frameworks. And so it just helps if they can determine what their position is and then act accordingly. So that's why the recommendations that we give are really just trying to give them a little bit more certainty as to where they stand. On the licensing front in particular, on their treatment as professional investors in Hong Kong, we make some recommendations that basically just acknowledge the fact that there are some family offices which have a very high level of sophistication when it comes to dealing with investments, and they should be recognized as such and able to trade freely the way other more sophisticated institutions might.
Oh, yeah, thank you. That is very clear. But Peter, I would like to have a follow-on, question for you, because Ron said, talent would be of extreme importance to the sustainable development of the industry. I would like to see if PWMA actually has that, of course, I know that you guys has a program, but I would like to, let the audience know as well.
Sure, and thank you for the opportunity to talk about what we're doing, and thank you, Ronald, also for your plug. We do have a talent development program that we're active with, that Goldman and a number of other members of PWMA are involved with. It's called the Pilot Apprenticeship Program for Private Wealth Management. It is a program that is specifically designed to encourage university students in Hong Kong to get exposure in the private wealth management sector. They can do 2 years of internships, 2 summers of internships with one of our member firms, and during that time get exposure to the front, middle, back office of the private wealth management sector, which then positions them extremely well for starting a career in the industry if they choose to after they graduate.
Thank you. Thanks a lot, Peter.
And I should also mention that we really appreciate the support from the Hong Kong Monetary Authority, who are our partners in co-organizing this program.
I'm sure, the public-private partnership is very important here in Hong Kong. Helene, I would like to now turn to you. As you are aware, we're bringing 2 different, seemingly different panels together today. But I think, these topics are of relevance. And for that, I would like to turn to you and see how and whether or not the myth of family offices paying a lot more attention to green finance and ESG is real first, and also, and if so, if it is real, whether or not Hong Kong has adequate training for professionals and also, students who are aspire to join the workforce in that area.
Sure, thank you, Rocky. That's a great question. The short answer is a yes and a not exactly for the second one. The yes is yes, they have a lot more appetite, I think, for green investments overall. However, in terms of the education and the talent pipeline, I fully agree with what Ron and Peter were saying before. There is a need to try to have a more structured way to enable them to know the narrative, know what is out there in the investable universe and all that. And unfortunately, that's all still a little bit fragmented at this present stage. So there are bits and pieces you can find, but in terms of how do I go about it, from a 101 structure to the 201, I don't think that currently exists in a very case-based, practical, pragmatic manner. And I think the training is going beyond just the practitioners in the finance industry. It also goes for the gatekeepers in the family office. I was running actually the family office programs in my banking days, and also the next generation program in my banking days. And all of the topics that constantly keep coming up is what kind of learning programs can we have that are practical, that maybe our gatekeepers or our teams can turn to. So I think there's a chunk there that probably, with all the brains around the table or virtual table here today, there's a lot more work we can, do in that front. Yeah.
Thank you. Loud and clear. I think, that statement is going to be brought to the Green and Sustainable Finance Cross-Agency Steering Group, which was established back in May 2020 this year. So time is running, we are running short of time, so I would like to have the final words to the panelists. Let's start with Rags, and then Peter, Rags, Ron, Helene, and Peter. And I would like to see if you can summarize Hong Kong's value proposition as a family office hub in one sentence.
Okay. One sentence is difficult. Say, okay, I keep it short. I keep it short. So I believe, I'm very encouraging. Like Joseph talked about, building Hong Kong as a family office hub is a policy priority of Hong Kong. So if you have to look at the history, we have actually done a lot in the asset and wealth management policy, introducing new policy in the past 10 years. Subsequently, it can actually help to grow the wealth management industry a lot over the last 10, 15 years. So I hope the government can actually continue to give support in this area, such that we can replicate this achievement on the family office side.
Thank you. Thanks, Rex. Now it's Ron.
Yeah, so I think the sentence that would apply for the attractiveness of Hong Kong for family office applies for the rest of the financial services ecosystem. And I think the sentence goes something like, you know, Hong Kong is a well-regulated, low-tax, free market on the doorstep of mainland China.
Thanks. That's loud and clear and very, and you kept it to one sentence. Now here's Helene.
Okay, let me take a stab at this. I think Hong Kong is very well poised geographically, economically, and in terms of talent to do the best-in-class service offering for family offices, whether you are a newcomer or you are looking to re-domicile to Hong Kong.
Thanks a lot, Helene. And now, last but not least, Peter.
Okay, I guess I'll probably repeat what others have said, but just note that you know, Hong Kong is uniquely positioned to provide access to China's financial markets and investment opportunities while providing the free flow of capital, free flow of information, integration into global financial markets, a robust legal infrastructure, and a simple tax system that make it a unique value proposition for family offices.
Wonderful. It's always good to have you guys. Time is running short. I'm going to hand it over to my wonderful colleague, Gloria, to handle the next session on the topic of ESG investment. This is a very relevant topic to our session, and I'm sure you guys are going to enjoy it. But before that, I hope you guys are going to join me in thanking Rex, Ronald, Helene, and Peter for their keen participation in this panel. Thank you.
Thank you, Rocky.
Thank you, everyone.
Thanks, Rocky.
Thank you.